Thank you for watching this video. Today we will be doing technical analysis on the stock market for Tuesday, May 4th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals and SimpleMarketSignals.com. Now, we will come back to this chart here in just a second, but I want to start off with a one-day, one-minute chart of the S&P 500 so you guys can see just how volatile today's session was. Now, we were only down 67 basis points by the end of the day on the S&P 500, and we managed to close at 4164.70. You can see that the lows of the day just before noon Eastern time today was 4128.59. Now at this point we were down over 1.2%. We almost cut the losses in half by the end of the day when we had this nice real nice push during the last half hour, starting around, or last really 15 minutes, starting around 3:45, and you can see some volume came into the upside. So when you look at this chart, looking at the end of the day numbers, it doesn't look that bad. However, it was getting a little scary, right? Just before noon, because the sell-off was pretty quick. And you'll see here, we're also going to look at small caps and tech here in just a couple minutes, and you're going to see that those areas definitely got hit today. So the next chart we're going to take a look at here is a one-year daily candlestick chart of the S&P 500. So each candlestick on this chart does represent 1 day of trading. The horizontal blue line, that is 39.75. We'll talk about that. We've got a short blue line here at 41.25. The 50-day moving average is right here, this blue line, and the green line is the 200-day moving average. Again, we already know that we were down 67 basis points for the day. We closed at 4164.68. And what we can see here, first off, is that we've been trading really sideways in the S&P 500 for the last 3 weeks. Right now, we're trading about 3.75%, about 3.25% above the 50-day moving average right here, and we're about 4.77% above this 39.75 support level, which really, other than this 41.25 level right here, which there is some support, a minor amount over the last 3 weeks, and you can see we came down and almost kissed that level today. Again, the lows of the day, 4128.59. So you can see here at that 4.25 level, we came down and stopped just above that today. So there is some support at 4125 on the S&P 500, guys, but it's about 3 weeks long, right? 2.5, 3 weeks long. So it may hold up. However, if the 41.25 level doesn't hold, the next level to watch would be the 50-day moving average. Oftentimes the S&P 500, as we can see here and here, will pull right down to the 50-day moving average and stop. Other times it does undercut it for a day or two, like right here in the first week in March. If we get this undercutting of the 50-day moving average, that would likely bring us down to this 39.75 level. Again, that's right here. That's about a little less than 5% below where we are currently trading. So I think realistic expectations are that at some point, probably in the not too distant future, we're going to pull back to the 50-day moving average or slightly below. If the S&P 500 were to pull back to its 200-day moving average anytime soon, that would mean a pullback of more than 12% below where we closed today. The next chart that we're going to look at is a one-year daily candlestick chart of the IWM. The IWM is an ETF that tracks the Russell 2000 Small Cap Index here in the U.S. And just like on the previous chart, the blue line is the 50-day moving average, and the 200-day moving average is right here. That's this green line. And we'll talk about this pattern here the potential pattern that I'm seeing forming. But the first thing I want to point out is that the IWM has traded sideways since the second week in February. So you look at where we closed today, which was right at the 50-day moving average. Hopefully you can see that up in the upper right-hand corner where my cursor is moving. But when we move to the left, you can see that right in here, right, pretty even to where we closed today, that is at the end of the first week, beginning of the second week in February. So the IWM, the Russell 2000 Small Cap Index, is really just traded sideways since the end of the first week, beginning of the second week of February. So that's the first takeaway. Now, keep in mind that the markets are generally healthiest when small cap and tech are leading us higher. But you're going to see here over the course of the next few minutes that small cap and tech have really lost their leadership roles. Now, the other thing that we can really start to see forming here potentially on this IWM chart, this daily chart, is a head and shoulders reversal pattern. And what I'm seeing here is the left shoulder, here is the head, and here is the right shoulder. Now, this would be the neckline on this head and shoulders reversal pattern. So if this pattern is truly forming here, and if the market does continue to roll over, what would confirm this pattern is if the IWM breaks beneath this neckline. So let's just call it 210, or a little bit higher, 210, 211, 212. So if we see the IWM fall beneath this kind of diagonal trend line, this neckline in this head and shoulders reversal pattern, that would indeed confirm this pattern. And of course, just like any other type of investment, if the market does continue to roll over, we break this neckline, then the next stopping place would probably be the 200-day moving average on the IWM. And you can see we pulled back right to the 200-day moving average in September before we made this huge run that kind of peaked, as we see here, and really stalled out starting at the end of the first week in February. The next chart that we're going to look at is a one-year daily candlestick chart of the triple Qs. Of course, the triple Q is the ETF that tracks the NASDAQ 100 index. Of course, there's a lot of tech, biotech, and a few other things in this index, and it does contain quite a few high PE stocks, which I think really is kind of hurting that index right now. But what we can see is that the triple Q was down 1.80% today, and where we closed today is about where the triple Qs were trading during the beginning of the last week in January. So we have really gone nowhere on the triple Qs other than some volatility. We have gone absolutely nowhere on the triple Qs since the end of January, since really the last week in January, okay? And what we can see here is we're still trading above the 50-day moving average, so that's all good. But what we can see is after trading sideways for a little more than 3 weeks on the triple Qs, they are really starting to weaken. So just like the other investments we talked about today, the small caps, the S&P 500, the 50-day moving average would be the first thing to watch. If we break beneath the 50, it's quite likely at this point that we would come down to the 200-day moving average on the triple Q. So it really appears that the market is stalling right here, and as we can see, small cap and tech really appear to have lost their momentum and have lost their leadership role, at least for now. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.